Yo, 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 yo. Yo, yo, just making sure you guys can hear me. Mic check, mic check. No. Yo, 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 appreciate you guys. Let's go. Yeah, I appreciate you guys for watching. I appreciate it. Yo, Muggs, what up, bro? Duma, what up? What up, gang? Damn, this thing is starting to pump. There we go. Yeah, I kind of seen this kind of starting to move up now. This was the move, I believe. You could kind of see right here on these areas right here. Here's the three-piece right here. Actually, this is a three-piece right here. Perfect sweep, right into it, distribute it. Like that. Okay, and then that whole range is gonna be all the way up here. It should be this guy right here. So this will be the range. And if I don't know if you remember yesterday when we were on stream, I was talking about this Asia range, this Asia low and Asia high, and you can see where we were kind of what was going on right here. What is that line right there? Let me see. Oh yeah, that's the weekly low. Okay, that's what it was, the weekly low. So if that's the weekly low, and it's looking like it's sweeping underneath, doing all that. So what would need to happen next would be something like this. close weekend. So it would be need to close above here. So this will be the close above. So this is on the 1 hour though. So what we would need to be looking for is a daily CRT. Meaning we need to look for a daily CRT also. So let's see what a daily looking like. Daily. So technically we do got a daily CRT forming right here. So what would happen, this is the low. This is the candle that broke the low right here. So you guys can just see what I'm doing right here. Let me make it a little bigger, you can probably see it. Appreciate it though, appreciate it.
Now I teach.
What the heck? All kind of stuff trying to play. Yo, what up, y'all? What up? What's up, Mohammed? Sounds too low. How about now? Can you hear me a little better? I don't know if it's because I'm talking a little too far from the mic. Let's see. Let me know if you could hear me a little better. Actually, I think I need to probably turn my mic up. Actually, I think that's what I need to do too. Turn it up. The volume on it itself is kind of low. But yeah, let me know if you can hear me a little bit better now. Because I think too what it was is the microphone sound. If it's only on the hourly, I would take some time to play out. If what is only on the hour, if it's only on the hourly. If it's on the hourly, it would take some time to play out. Yeah, no, okay, yeah. So this will definitely have to play out. It would take some time for sure, because each candle will be an hour. So yes, this would definitely take some time. But when you also understand how the CRT works, you can see that this is your, like, these are the daily candles right here. So there would be your CRT right there. But the thing is your third candle is where it distributes. So what would happen is what I'm gonna want to see is the third candle is where you're gonna most likely have that distribute at. But so look at, there's a few different scenarios like this. So we already have these like candles that are wicking into right here. So what usually happens is we have a close below, and then the next candle closes back inside of this range right here. So if that ends up closing back inside of the range, then it's kind of already playing out on this time frame, which is the daily. And then that means on the monthly we should be seeing some kind of CRT, which is nothing yet, because this would be a CRT to go up. So that means, yeah, it's a model 1 to go up, so we would see a CRT. No, it's not. So that's definitely not it. So what I'm talking about like when I'm saying these switching these time frames back and forth is how they're supposed to line up. Like when you have a model 1 on the 1 hour, you need to make sure you have the CRT on the daily. Sup, stranger? Yo, what up, Caleb? What up? What up? I appreciate you guys for stopping by, though. Appreciate it. Hey, make sure you guys hit that like and subscribe. Hit that like and subscribe for me. And we're gonna cook up some right now. Well, I mean, I took a trade earlier, so I'm already kind of just kind of watching right now, but I want to definitely set up something, try to grab something. All right, what was I gonna say? Let me see. All right. Oh yeah, that's what I was gonna check. We got 5 people watching. Hey, that's what's up. Yeah, nah, we've been bitmesone. What up, bro? What up? What up? Stoic. My boy, what up? I ain't seen you guys in a little bit, but this is why, because I ain't been streaming, huh? That's my fault. Well, yeah, we back cooking now. I'm gonna pretty much be back every single day now, so that's my goal, is to be back every day. All right, so yeah, this is where I was at. Okay, so like I was explaining about this being the third candle right here. This is gonna be the third candle on this daily CRT, right? So if there's a CRT right here, the third candle is the one that usually distributes. That's the one that you want to distribute. Almost just like this one over here. You can see this one, same thing. This was the CRT, and then this candle is the one that distributed. But it did reject after that. But it's just the idea, though, is that that is the candle that distributes, meaning when you see it right here on this third candle right here, that's when whatever's in this candle is going to form right here on the smaller time frame. So if you understand that the distribution needs to happen in the third candle, then that means when you should be looking for your trades should be somewhere in this third candle, which is after the Model 1 forms and it does all these things, and then it kind of creates this expansion kind of thing. So but that's the one thing, though. So understanding that means you would have to wait till the third candle on the daily if that's what you were waiting for. So that means if I were to put a line right here, let me make it a different color, let me make it yellow. That would be the third candle, because you could see there's one here, this would be the third. So when I go back to the hourly, it would be at the yellow line. So that means the move technically wouldn't happen until this yellow line, if this was the correct one. But from what I've seen, the fact that it has so long, look at how many candles this would be. From here till there, that's 15 candles, which is 15 hours. So that means in 15 hours, because the way the Model 1 works is like we're saying, it accumulates, then it manipulates, and then it distributes like that. But in the section of the distribute, which is right here, it usually gives like a retest before it distributes. So what I'm pretty much saying is that if it distributes in the third candle, which is not going to be all the way up until here, that means it can't do its retest before it goes into this line, because like I said, if we're expecting it to be in the third candle, then that's why I'm saying is why the whole expansion is going to happen too soon. So just understanding that, like, when it needs to happen, you could kind of tell that this might not be the one that I'm thinking. Just for this reason, it's just because the next daily candle doesn't open until 15 hours, so it's still gonna be a while for that. I mean, it could still do this, it could go up and then come back and then maybe do it, something like that, but maybe something like that on this side of the line, because it goes back to what we're saying is this is the most important part of of what we do when it comes to this whole CRT stuff is this. You have to understand that we're trading the smaller candle. I mean, we're trading these big candles, but you also have to understand it on the smaller time frame. So if you understand it on the bigger time frame, which is okay, I know the third candle distributes, which is the candle that makes the longer run. That's not until this area. That means in an ideal world, this third candle, which is going to distribute, won't be until somewhere till after this line. So if that's the case, you would have to wait till after that line. And that's only if that is the correct trade. So well, let's just say this is not, just from the fact that it's so far away that it might not. But then again, this is the thing, is it could just be doing this for a while too, because oops, no, not replay. When you go to the forex factory, which is where we see the news and stuff, today's Tuesday, and we go to tomorrow, which is Wednesday, and we have all of these folders right here, and we have FOMC. So what it's kind of telling me is, when you understand, because you have to also understand that the big moves or the big volume is on the days that there is news. So like when I'm looking at the chart and I start seeing things like, for instance, let's say this, and it's supposed to distribute not until this candle, then that means this could actually be the low, which could be like the London low, and then New York could be like that. And that's where you're going to want to take that. But the thing is though, how I'm also understanding though, is that this third candle closes tomorrow at 1, or 1 or 2, whatever time it is. But the idea, so that means this whole candle, all of tomorrow, including the news, is going to be incorporated with this second into this candle right here. So it kind of goes back to where I'm saying too, is that this could just be a possible fake out, or it could just even tap this high right here, which will be this area, before getting rejected again. So it's like, so what I've kind of been able to kind of see is there's kind of like a combination type of thing. So if something is not right, there's a reason why. If it's 15 hours, then we expect tomorrow Asian session we might get that move. Muhammad, that is correct. But the only thing is let's say the expansion kind of happens before this line. This is why it's important to understand what I'm talking about, the CRTs and how time aligns with price and stuff. Is because if you already understand it needs to be in the third candle, then you know the expansion should be after this line. But let's say it does everything it wants to do before the line, and it does it all inside of this second candle. What that tells me though is that instead of it being the trade, because this is what people would do, is, for instance, let's say they take the trade wherever it ends up being, somewhere right here, wherever it ends up being, and they're going to expect it to go all the way to the top, because that'll be like, the perfect RR for somebody. So this is how I think about it, and like I use this way of thinking to kind of like think outside of the box. Is that if somebody were to put their entries right here and expecting it to go all the way back up to the top, I'm not taking the trade, I'm just trying to put it an example. So like, let's say somebody did take this trade and it happened before the yellow line, like we're expecting. What this tells me though is that the person that's in this trade that's expecting it to go all the way up here is going to eventually probably be wrong, because of the fact that it's the sequence is happening too soon, which means it's happening before this line, which is, it's just going to be inside of the second candle. which is, it's fine if it happens in the second candle, but then it's a whole completely different idea than what I'm expecting or what I'm thinking of. So it kind of just like where I'm saying though is that the person that would think this is the correct trade, they're going to end up being correct for a little while, but then at some point then it comes back down like this and it doesn't do what we thought, and then it eventually does it after or something like that. So that's why I kind of just waiting for things to play out. Hey, question: do long-term technical bias right now on gold? Do you have? Oh, do I have? Kinda. I mean, I don't really. This is on the 4 hour, so like I'm gonna show you the bigger picture. This is what it looks like. This is what it looks like. Let me get rid of a few of these things so you can see it a little better. So this is more of the oh, that thing's jumping up, pushing. So you could kind of see this is where this is kind of what I'm looking at right here. This is more of my long-term idea, but this is just because this is what I've been kind of trading off of, understanding like, okay, this is an order block trade. It pushes up and then it comes back and it creates this OTE trade, which is another model that I use. So this is how I found it. So once I find that, you understand what happens after OTE. What I always believed is that OTE usually goes to the top of this range. So I was expecting, when this move started going up, I was expecting some kind of pullback, but I did take a buy here. I was able to secure and get out profitably, but look at what ended up happening. So that's why I'm kind of saying is like, this might have been one move too soon. And if this ends up being the real move, and then this is the one I'm thinking could be targeting up here. So like, because of the way I have this all marked out, just understanding like from what I understand and what the data that I've collected, I know a OTE targets this high. So that's kind of why I've been kind of targeting these highs, but I've just been kind of looking for a way to, we're looking for a trade to go back up there, which is kind of why I took this one, thinking this was the move. But it kind of goes back to what I was just saying, is that there's always going to be a move to make you think you're right. So somebody who took this buy here probably had their take profits up here. Obviously, like it's like the basics of trading 101. Where would you put your stops? Where would you put your TP? You know, kind of be the previous high. So somebody would have it there just for this idea. They go break even, maybe take partials. If they do, go break even, thinking they're going to go all the way to the top just for it to be wrong. And then again, same one, be wrong. And then, so it's almost like it's exhausted people once, twice, and then now this is going to probably be the third time. And this could be the one that is correct now. And then these are the three highs that it's going to start targeting to make its way all the way back up to here. And then from what I understand, how it makes its way up from here is it usually does something like that. So there's two options here though. So when it makes it to this high, what usually happens after an OTE? So this is what I'm saying though, is that this whole idea is based off of this. So if this ends up being the right OTE and it does go to the top, then that means what happens after that is it does break above, it does come back for a kiss of death, and then it goes back up like that. And then after that high, it usually comes back down kind of. So that's what it kind of says, is that you need to kind of understand. Well, I mean, I'm just saying, like, I need to understand where we're currently at, so that way I could, like, so if I'm ended up being right, then that's where I kind of says is I'll be able to take the trades accordingly, which means this one, knowing from here all the way up we should be bullish. So any type of trade I would want, I should look for some kind of pullback, because I kind of understand it needs to still go up here. But that's if I'm right. Like I said, I could be wrong, but I'm just going off of like the data that I've collected and how I understand the OTE and stuff like that. Like I've been waiting for this buy to kind of happen because I've been waiting for because I've known, like I said, I've been expecting it to go up like that. So, and look at, there it goes. So it goes back to kind of what I was saying about this area. This is a wicking into, and then this is a close below, and then the next candle is either going to be a close above, which means this is going to close back above, or it's going to get rejected at these lows, which is where this wick is at. So you can see this wick right here. So it's like it's at a decision point. So that's kind of why I was saying about understanding the distribution. If the distribution needs to be in the third candle, then if this does distribute too soon, which is they did get this retest, this is why it'll possibly come back down or do something like that. And it's not the one, like I'm saying, is like not every trade is the one that's gonna go all the way to the top like this. Like that's why I kind of say too, you gotta understand. Like I always say you, but I try to say I, because when I say I, it's like I'm talking to myself. But the idea though is that not every trade is gonna go to the top. So I gotta understand which trades are gonna go to the top and which ones aren't. And then when you understand the quarters and like how we talk about the quarterly theory and stuff, damn, and what's crazy is I had a buy from down here too. I had a buy exactly from this level, but I ended up closing like at 25, 30 pips, something like that. Wasn't nothing too crazy, but oh yeah, but okay, and like I was saying about the quarterly theory is understanding these boxes at the bottom. You could see, look at, this is quarter one, quarter two, quarter three, quarter four. And it looks like we're in quarter three right now. But we do have an SMT from quarter two into quarter three. And that could be the SMT that pushes it up. But I mean, this is also too, I mean, you could kind of see from yesterday when I was on stream yesterday. Shit, had my monitor on mute. Can you start again? Damn. No, it's recorded. If anything, you could just rewind it and rewatch it. I didn't say too crazy. Oh, just kidding. Yeah, no worries. But yeah, so well yeah, but like I was saying yesterday, if you guys remember yesterday, I had found these Asia high and Asia low, and you could kind of see what we just did. So what we just did is kind of swept that. That was kind of what I was kind of waiting for. Looks like NAS did yesterday. I gotta check out NAS. But yeah, so that's kind of where I'm saying is this right here was like the manipulation. So if we end up closing back inside of here, that's kind of why I was saying though about this this whole move right here is the way the Model 1 works is, I mean, but this could have been the Model 1 right here because of the fact that this is the candle that broke the low. As you guys can see, this is the candle that broke the low out of all of this. And that is the candle that also got the tap right here. So that's kind of how that's kind of like the giveaway sign that is like the order block or the just that key level that it bounces off of. But it's usually the candle that breaks the low. There's a few different ways of finding it, but like there's a time where it's the candle that closed below. So like this one closed below, kind of gives you the same answer if you kind of think about it. This is the first candle that closed below, and this is the high, and that's kind of the same little rejection or like the bounce off of it. But that's kind of what I was saying too about this area though, is that this is gonna be like, this almost looks like a possible fake out. I'm wondering if this could be a fake out, which what I'm saying though is if it closes, it'll close back inside of this range, and then inside of that range will also be inside of this Asia range, which is this previous range that we kind of just came from. So what I would kind of want to see is we could possibly start targeting these highs, and I'm just wondering, because tomorrow is news, so I'm just kind of wondering, like, the one thing is that what I've seen with news is like, you like the what I've seen with news is news doesn't pick the direction. The direction is already picked. So let's just hypothetically, let's just say what I'm saying is correct, as in, let's say this is the manipulation, this is going to be the close back above, it's going to possibly retest, and then it's going to start pushing back towards this high right here. Let's just say it does that. When news comes out tomorrow, it's going to be somewhere around this area right here. And I'm just using this as an example just to point out like the idea of what I'm trying to explain. So what I'm saying though is that if news ends up being somewhere in this area, or let's say it's right here, or let's say it's right here, or wherever it ends up being, it's already been kind of decided. So like this whole manipulation down here, closing back inside the range, targeting back this high, it's all like it's already been decided. Like the news isn't until tomorrow. So let's just say I've been able to already kind of predict where we're heading because of just the way this market structure is kind of forming. So let's just say I'm able to decide, okay, yeah, it's going to go up to these highs or whatever. But that's just what I'm trying to point out with news, is that it's not like news comes out. It's not like we're going down and all of a sudden news comes out and then it says, "Oh wait, we're going to go this way now." Like as if it was unexpected. No, the thing is that it's already expected. So if you're able to identify like what's going on, like let's say, oh, this is a CRT, this is that, whatever it ends up being, it already says it in the chart. So that's kind of what I say too, is that if you're able to find something and then you know news is coming out, you kind of gotta add that to your analysis in the way of saying like, that's probably why it's not gonna push right now. Or maybe because like I said, it's still, let's see how long it is until news tomorrow is, and what time is it tomorrow? It's at 11 o'clock. Wait, is that my time? Yeah, it would be my time. It would be my time. All right, so if this is for my time, then that means it'll be 1 o'clock for news when it comes out. So 1 o'clock for news would be like right here. So that's 11 candles away. So if that's 11 candles away, that's how long it could be like stalling for or whatnot. But yeah, that's kind of and if you, like you said, the whole purpose of what I was saying yesterday too, and what's funny is that yesterday, this is kind of what I was saying, is like I wanted to see some closes below these areas before we actually push up. So that was also like when it did start pushing up, it's almost doing the same thing, where it was like it started pushing up because it gave us a signal that was pushing up, but the signal was also the same kind of signal that I'm getting now, which is something's not aligning correctly, or the expansion is happening too soon. And that's where we say about time and price need to align. If time and price need to align, if one of them is not aligned correctly, then even if you get a move, which is, let's say it's 50 or 100 pips, it's not that 50 or 100 pips that we're all used to, as in like because if you say, oh, it's gonna go 100 pips, and it does that, then that's perfect. That's part of the plan. But if you say it's gonna go 100 pips and it only goes 40 pips and it goes against you, then that's where that's the whole point I'm trying to make. Let me see something. Be right back. Yeah, for sure, bro, for sure. All good, all good. Yeah, so, and yeah, so that's what I was kind of saying too, is that even if, let's just say, like, let's say right here, this is a good example over here, like yesterday. Let's say you did catch a move from here, and this is from here to here is still 130 pips. So it seems like this is a lot of pips. That's only if you get out at the top also. So you get in here, you get out there. But what I'm pretty much trying to say though is that you can't take this trade and then expect it to go to the high, and then when you end up being wrong, you can't go to sleep saying, oh, I was still right, like, oh, I'm still good, because this is what I'm saying is, like, you could still catch 150 pips right here, but that doesn't mean it's the real move. Like, the real move is this guy down to this low. The real move would be from this guy all the way back up to the high or something. Like, those are the real moves. So that's kind of what I'm saying, is that even if you catch from here to here, unless you understand, okay, I'm getting in here and I'm getting out at this high, it's almost like this move right here is not the real move. So it's like that's why I kind of, it's, everything's fractal. So a 5 pip move that is wrong, let's say it goes here, boom, 5 pip move, is no different than a 200 pip move that did the same thing, but it's just on a bigger scale. So if you were to look at it on a weekly time frame, it's just a top wick. It's just one top wick or something, you know? So that's kind of what I'm saying though, is that there is like a real move, and you kind of got to understand where you're taking it. Damn, this thing is moving. Damn, that might have been that. I wish I would have held that. No, I don't wish nothing. I did what I did, but I'm just saying, this was the move right here, it looks like. But that's kind of what I was saying too though, is that, okay, there was actually a 1 hour model one too, I think, right here. Or no, it was a 4 hour. That's where it was at. That's what it was too. 4 hour right here. Look. Yo, I got the same. Which one? Forex? Oh, Dub 7. Which one you talking about? You talking about the Don Vote one? Oh yeah, like that? Yeah, the OG one. That's what I'm still rocking. Damn, this was why though too. Okay, look, this is actually a perfect example right here. Game 101. Let's see if you guys paid attention. Yeah, the DVS one. Yeah, bro, I still rock that one all the time. That's my background. So look, this is why I forgot I even did this. This is what I'll still be rocking it to. This is what I was saying about earlier about it being the third candle. As you can see, and look, I mean, if you guys know me from our days back in the day, this is a three-piece right here. You have an inside bar, and then you have this one that broke the low, swept up, and it's gonna start targeting this high up here possibly. So, but what I'm pretty much saying was, this is what I mean by the third candle. Look, 1, 2, 3. I mean, this was the low right here, but that's the idea, is that look at where the expansion happened at. So if you wanted to take a trade, you need to be inside of this candle right here, which is now, let's go back to the 15-minute. Exactly, you need it to be over here. And that's where I took the trade at. I took the trade off of this candle because it goes back to where I'm saying about it being the expansion. Let me switch this back to the 4 hour. Perfect, right there. Look at this. So you got the 1, and then you have the high up here, and then that's, like I say, this was this candle right here, which is this expansion one, which is this 4 hour candle right here. It starts right here, and that's where the expansion happened at. And look at what, like I was saying, this whole move right here is inside of this candle right here. So that's why you want to take the trade inside of this candle, because this is where your move is going to be from. And that's where I kind of say you have to, it's the same thing Don taught. This is why I understand it the way I do, because Don taught it this way. Was it's how you reverse engineer the candles. You go to the higher time frame, which is these candles right here, and then you look at these candles right here, which is on these smaller time frames, and that's how you understand what it is on the bigger candles. And then just understanding that candles are ranges, you could see this is the high, this is the low. The 50% is pretty much where we're at right now, and then your next level, your next target will be this high. But this is why too, I'm gonna show you. Look, so yeah, you can see this was on the hourly. Let me remove these now. Let me show you where it goes at. So look, you have it right here. Look, wick into key level, close below, close back above, close above candle that wicked into key level, and then this is the tap of the key level. So you can see this is the tap right here, and that was where I got into the trade at. And then understanding where I'm taking this trade for this reason, you're able to have these tight stops, because the way I take the trade is understanding that this should be the low right here. I mean, I'll give it a little bit of breathing room. I usually go like 25, and that's what I want. I don't want to use more than 25 pips if I don't have to, but I closed way a lot sooner than that. I closed like somewhere right here. I wasn't too sure because of how bearish we were, but obviously that's why the model showed up, was for that reason. It's just for the, like, what I say too is that this model doesn't show up just for the heck of it. Like, it only shows up if it's the real deal type of thing, because it's a sequence of candles. So pretty much what I say about it being a sequence of candles, the sequence of candles doesn't just show up over and over and over. Like, it only shows up when it's supposed to do what it's supposed to do. But that was kind of, yeah, that was the move right there. I totally forgot. I don't even know why. Because I had taken that trade before off of that smaller time frame. So when I got out of the trade, that's when I started noticing it on the higher time frame, and that was kind of what I was marking out. But now it makes sense. Yeah, I forgot about that. It's just right here on this 4 hour. Yeah, for sure. Yeah, I appreciate it, Dub7. Yeah, if you guys have any questions, feel free to ask. I'm here to try to answer them. The thing is like, now that I've been gone for so long, I have a lot of new concepts kind of thing where it's all the same stuff. It's just more advanced. There's a lot more detail. There's a lot more there's an actual model that we can follow every day now. So that's a good thing. And that's how every trade is going to look the same, pretty much. That's how we get every trade to look the same. So, like, in order to be consistent, in order to be profitable, every trade needs to look the same. If every trade could look the same, then yeah, you're gonna be doing your thing. Okay, so look at now, there is also this gap. So look, you can see that this gap right here on this 4 hour got filled. There's also a 50%. Like I always say about when you're trading the CRT, rule number 1, rule number 2, rule number whatever rule you want to call it. When you're trading the CRT idea as this candle being the range that you're trading, you always go to the 50% at least is your first target. And look at exactly where it got rejected at. Exactly at the 50. Damn near to the point. Like, look at that. Look at that, to the damn point, bro. But that's just the point I'm trying to make, is that that's why it's so important. You gotta use that 50% as like your first take profit, and then you go break even after that, and then if it does keep running, you'll catch the whole high. But if you kind of go back to what I was just saying about earlier, I'm not saying I'm right, I'm just saying is that how I was saying this is the move to go up, but on the higher time frame it's not really aligning correctly. And then that's where I'm kind of saying is that if it's not really aligning correctly, it's is why it won't continue just to keep going, you know. But the thing is though is that this is the area I've been waiting for. Like, this is exactly what I wanted to see, was is a sweep of that low to start targeting back these highs again. So, but the one thing that is kind of throwing me off is just the fact that the time, which means that daily candle, which is on these candles over here, that daily move isn't going to be until this next third candle. But the third candle could always just continue up like that though. But then that means this candle will either have to stop right here where it's at and just keep, because remember, it still has 15 hours or whatever, however many hours it is. So for the next however long, it's either going to be going up or going down. But the more it goes up, like the more it's exhausting itself, meaning there will be a bigger pullback. Whereas then if it kind of just stays kind of ranging like this until news or something, and then it explodes off or something, that would almost be better off. But then if that's the case, then that means this move right here is not going to keep going. So you see how they kind of, like, it kind of gives you the answer. If this just keeps going, then news tomorrow is something totally different. I don't know what's going to happen. But if it starts pushing off till news, then, you know, it's just kind of one of those things you could kind of tell. You just get like a weird feeling, weird vibe kind of. But this was all from yesterday. That's why it's crazy, because it's so funny, because when I was saying it, I was like, I want to see a close below. I want to see a close below. And then it started pushing, and it gave me every reason to think, damn, I'm wrong. But I didn't take a trade because of that, because what I was saying was I wanted to see a close below before a move up. If I haven't got a close below yet, then it's not part of the plan. And that's why it's almost good that you have to anticipate. Like, and the only way you can anticipate is understanding what needs to happen next, so that way you can anticipate. So if you're able to anticipate what's happening next, and then you say it needs to close above here, and it does that, then that is letting you know you're on track of whatever you're talking about. Whereas let's say you say, oh, it needs to close above here, and it doesn't do that, that is already a sign to let you know you're not in sync. And it's not a bad thing that you could be wrong. Like, it's almost a good thing. you want to be wrong in the sense of you can at least identify, okay, I'm not in rhythm of it, let me take a step back, let me wait for some more things to play out. Because if you just think, you just every single time you're gonna get it right, it's not gonna work that way. Yo, what up, Krish? What up? What's good? What's good? But yeah, I just was yapping right now. But yeah, like I said, guys, it's mainly what I've kind of realized a lot is a lot of it has to do with just your psychology. It's not that you don't have a good model or a plan that you can't follow. It's just the fact that you may be forced to trade when you don't have to. But that's where it goes back to where I also say, how do you solve over trading? How do you solve FOMO? How do you solve taking bad trades and things like that? What I've realized is if you have 5 steps, let's say 5 steps before you take a trade, all 5 of those steps have to be met before you take a trade every single time. So that's what I'm saying is like, that's how you won't take a FOMO trade, because how could you take a FOMO trade if all 5 of your steps haven't shown? How can you overtrade if you're waiting for your 5 steps to happen and your 5 steps haven't happened yet? So that's where I kind of say, it's like, it's almost easy to wait for a trade when you know what you're waiting for. And a lot of times people say, oh, I got a model, I do this, I do this. But in reality, don't really got a model that you can follow every single trade. And that's where I kind of say is like, you got to get these like 5, however many rules you come up with, but things that repeat. So it's just like understanding like how I talk about the CRT. The CRT is built, it's like a system. So the CRT has built-in liquidity sweep, which is, that's what the wicking below is. It's a liquidity sweep. So that's what you want to see in a trade. It's, let's say this is inside of a gap. Perfect. Look, good example. Here's a gap right here. There's like a whole gap. Perfect. See, where's it first? Yeah, right here. And look at where the gap, look at where the trade happened at. So that's what I'm also saying is that, where would you want to be taking a trade at? Inside of a gap. Where do you, so it goes back to this. Okay, a CRT has a liquidity sweep, perfect. Inside of a gap, perfect. Closing below, closing above, perfect. First fair value gap, perfect. Like there's steps to doing something for you to be able to take the same for you to take the same trade over and over again. So that's kind of what I'm saying about, like, it gets emotionless, like emotionless. Like you're not even worried about it no more, just for that reason. Because like I said, you just have to wait, and like, and that was why this move right here was a valid move, to at least take a move up. It was because of the fact that it was valid. It was and this is where I also say, you got to know which time frames to align. Do you guys know which time frames to align? I have the list. If you guys want it, DM me on Instagram. My Instagram is in the description. But just send me a DM and I'll send you the pictures. But pretty much how you line them up. This is an easy way to remember. You can see the times that I have at the top. So look at the time frames that I have at the top. So the CRT is the 3 candles, right? So the CRT is these 3 candle ideas that we talk about. The Model 1 is inside of those 3 candles, but it looks like this, which is, you know, when we talk about the closing below, above, order block, that kind of stuff. This is Model 1, this is CRT. So let's say the CRT, which is this guy, CRT, and this is the Model 1. If the CRT is on the daily, that means the Model 1 needs to be present on the 1 hour. If it's the CRT is on the 4 hour, the Model 1 needs to be on the 15. And then for this case, that's and if you notice the pattern, how it happens is, like for this example, is the CRT is on the 4 hour. What you do is you skip the 1 hour and you go to the 15. We don't use the 2 hour. We use the normal 1 minute, 5 minute, 15, 1 hour, 4 hour, daily, weekly, monthly. So like I'm saying, in this case, if the CRT is on the 4 hour, you skip the 1 hour, you go to the 15. So pretty much everything that you align is always going to be, you skip one time frame below. And then if you're really, really good, like understanding and creative, what would happen is you'll start to realize everything is lined up that way. Meaning, if you have a order block, you're lining it up with some certain time frame. What time frame do you think the order block should be? It should be on the same alignment, the same way, which is you skip a time frame. But yeah, that's that. But that's what I was saying about this being the 4 hour. Let's go to the 4 hour. Perfect. There you go. You have your Model 1 here, sweeping, closing back above. You have your 50%. There's your model right there. That's what you're taking every single time. And we're inside of a bigger, higher time frame gap, which is this red box. So there's a few, and this is what I'm saying too about the model that I'm creating. Like, I mean, I already have it. It's in my head pretty much, but the idea is what I want to do is have it written down. I want to have it written down to the point to where it's literally step by step. You're just following it. Okay, this candle needs to do this needs to do that. And once it does all those things, you're just trusting it. There's no more guessing. There's no more emotions. Like I say, it's like connecting the dots. 1, 2, 3, 4, 5, perfect, take it. And you're accepting it. Because like I said, and especially like I said, when I was in the trade from earlier, I was in it so tightly where I didn't need more than a 20 pip stop loss. The idea though is that that's the trade you want to be in. Every single time. But yeah. George Owen, hi Nick, how you doing? I'm doing good. What's up, bro? How you been? I ain't seen you in a while. Hopefully everything's been good. And look at what's right here, George. The model, the 3-piece. Perfect. I don't know if you've been following along right since, but yeah, like I say, the whole 3-piece idea is still valid. Everybody, that's what this whole CRT is actually. It's pretty much a 3-piece. It's just a refined version of it. You can even see right here, this one right here was the same thing, and it swept it all the way back to the bottom. 3-piece, yes sir. Let me know if you guys have any questions though. I'll help you guys out if you guys have any questions. But yeah, like I say, the idea though is that the 3-piece is what we use for the range, and then going down to a small. I've been away for some time. I know. I figured you were, because I hadn't seen you, and we hadn't talked or nothing like that in a while. So, but hopefully everything's been good with you, George. But yeah, guys, do not give up. Every day, you guys got to be grinding every day. This is our only way out the hood, y'all. So you guys need to make sure you're grinding every day. Yeah, I'm gonna be back though, streaming every day. So you guys already know how that's gonna go. We're gonna lock in every day. Yeah, I got a lot though. I got a lot cooking for you guys. You guys need to make sure you tapping in every day. It's gonna be like a 3 to 6 month course. 3 to 6 month 3 to 6 month course for y'all to just learn everything I've been learning. And then after I hit a certain amount of payouts, then I'm gonna go into a mentorship, and then we're gonna be really rocking and rolling. But now I'm back. Damn, it's already been 2 years. But yeah, let me see. I'm just trying to look up something real quick. Oh, how about Bitcoin though? Bitcoin dumped off too. The other day I was looking at Bitcoin, and I was kind of expecting it to kind of drop. There it goes, like that. Let's see. Oops. Oh, we're right here at this OTE. You guys can see right here. That's the same thing that kind of happened right now on gold. Like what I want to show you right here. Same thing, pretty much. Right here, the OTE, which is just the 75% of the range that it came back to. So this is after it pushes up, it did all this stuff, right? And then it comes back. Let me see. All right, let's see. Yeah, this is valid though. I did like it goes back to, this is why I say too, once I get this model down, this whole weekend I'm gonna be working on completing this model and I gotta like really sit down and spend like 6 to 10 hours probably finalizing it, writing it down, making sure everything is in order also, because sometimes it's hard to remember a lot of things. It's 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 because of like what I'm saying about it being inside of a gap. I had that was the reason why I was in this whole idea, just because it's inside of a gap, which is also why I'm looking for that to, do what it needs to do. But that's just one thing that could easily slip your mind if you just forget and kind of just understanding. Even though all of these were in a gap, but they're not the real gap like these. And this is also an SMT, and then going a little further, knowing what quarter we're in, like you're saying about this being the fourth quarter, this is the second quarter, and this is the third quarter. This is the third quarter right here we're in, and then there's still going to be the fourth quarter. But you could kind of see, let's see right here. Yeah. But this is why time is important. It's all about time. And this is why I say too, there's a lot of stuff I gotta teach you guys about time that you guys aren't gonna just understand it the first time you hear it. You're gonna have to hear it 5-6 times before you even just remember I'm talking about it, and then so on and so on after that. And let's see if Dub7 Forex is still in the chat, but you could see the type of play that could be possibly forming right now. What does this look like? See, where is it at? Oh, right here. Yeah, right there at the top. Something like this. The good old celery play. The good old celery play. That's what this is kind of forming. It's just being funny. I don't know. Let's see. The reason why like I was saying earlier though, about how the daily one wasn't really aligning, and it just seemed kind of off, like something was kind of weird about it. But then again, that thing could just be a fake out to go back up. That's kind of why, this is what I also tell myself too. When I got out of that trade earlier, the fact that I wasn't confident, even though, like I say, is like I wasn't confident to say, oh, it's gonna go all the way to this high, this and that. So since I couldn't say for sure, I just got out. Because one thing also I try to do is never do no shoulda, woulda, coulda stuff. Like if I get out of that trade right there, even though it went up another 50-60 pips, I could be like, dang, I should have gotten it, I should have stayed in, I should have did this. I would have stayed in had I known. The fact that I didn't know is the reason why I got out. But the fact that I didn't know is the reason why there isn't no shoulda, woulda, coulda. If you kind of get what I'm trying to say. Because if I believe, like how I'm saying, oh, I could have did this, I could. If you could have, then you would have. If you believed, you obviously didn't even know. So you're like, it's a surprise to you that it still went up. So that's where I'm kind of saying is like, if the plan was, oh, we're gonna ride it all the way to the top, and then it does that, that's because it's the plan, and it's easier to hold when that is the plan. Since I was a little unsure, and I kind of wasn't too crazy confident about it, I just, like I said, I took my piece, and it is what it is. But on to the next one. But the point I'm trying to make is, if you're ever worried, just get out and don't say shoulda, woulda, coulda, or I should have held. No, because if you knew it was going up or down, whatever direction your trade is, you would have held it. So the fact you got out is your sign to let you know you didn't know, and that's fine if you didn't know. Just wait till the next one. And that's why I kind of say too is like when I have an idea and I know I'm like, I mean, obviously we never know we're right, but there's ideas that I know, like I think I found it. I found the correct one. I I can just, you can just tell, you can almost feel it. But yeah. And look at, there it goes, starting to come back down. So, and why would it come down there? Because also, like I was saying about this is a gap right here. There's a high right here. Is doing everything pretty much almost like a Model 1 to come down. It's the Asia low. Wait, look at this though. Look at what I see here. So I see this, which would cause the 5 minute. So you need to close below there. And then I believe it needs to retest its. Well, that's not it. That's not it. Oh wait, this kind of did, dude. Look at this. Is kind of what I was looking at. Okay, you need to close below there. Perfect. You got to close below there. And then it's your first fair value gap after that as a retest for it to keep coming down, and it'll usually target either this gap right here or this low right here. That's kind of what we need to see. Yeah, and that's the 5 minute, so we should see it on the 1 hour. Perfect. 5. Wait, but that's, yeah, it's not. But appreciate you guys for watching though. Make sure you guys hit that like and subscribe. Hit that like and subscribe. I appreciate it. Okay, here we go. That's what we're looking for. But see. Izzy, because of you, I know to use the indicator to the right too. It's like so helpful to always have a bigger picture on the screen next to the smaller time frame. Hey, appreciate it, Tobe. Yeah, man, this is definitely good, especially too like what I've been doing a lot lately because I do go through quite a bit different time frames and stuff. Um, I've been switching the time frame a lot. Like I double click it and switch it back to the daily real quick. Get whatever time frame in it. It definitely does help a lot because it goes back to understanding that if candles are ranges, that's what you're trading. You're trading the range of these candles, but then you also need to understand what it looks like on a smaller time frame. And if it's, because a lot of times I think what happens is people will read price action as if this is the price action, which is it's true, but the thing is these candles are the smaller version to a bigger candle. So it's all fractal pretty much. It's all just like if I remove the time frame, they all look the same. So you really would never know, but that's why I say it's like it's important to not just trade these candles on this time frame because you're missing this part of the information, which is also important. And then just like how Don talks about range 1 and range 2, this is range 1 and this is range 2 pretty much. So you could see where we're getting rejected at. So what would most likely happen is we probably need to retest this before going up if we do go up. So let's see, that was the breakout. So that was the breakout above. So let's go to the 5-minute. This will be the first fair value gap. So it's looking like we definitely might target this area down here. Oh damn, I'm supposed to look for this. Alright, let's see. Yo, Mohammed, please can you tell which indicator for time frame? Oh yeah, this indicator right here is called this power of 3. TTM HTF candle overlay power of 3. And you could change the time frames and all that stuff, so perfect. Here it goes. So look, now we're breaking these lows. I want to see it start breaking this low because this actually happened yesterday, exactly the same way yesterday. Like I'll bet you I'll find it. This is exactly perfect example. Look at this, guys. It's like I remember everything. Look, okay, see the break above? There's the break above, and then look at your first fair value gap. Look at what happened. And this was the exact move that did take us all the way back to the top again. So what I'm kind of seeing is almost the same exact thing. And I'm wondering if it could do the same thing where it does go up a little bit before coming down. So I'm kind of, oop, there it goes, moving up a little bit. But the reason why is because like I'm just doing it the same. I mean, the same idea would be like this. We closed above, and you just go to the smaller time frame, and it's your first gap, which is right here, and that's kind of what I'm seeing. That's what I kind of see. It's like a decision point. I think this will be a decision area. There's obviously only two ways it can do, obviously up or down, but it'll either hit here and bounce up, or it'll hit here, break through, retest, and then continue down. So the thing is what I'm trying to point out is I believe this area is like a decision point. So if it's a decision point, then it's gonna at least need to tap there. I think that's my idea, but let's see. I mean, it did just stop right here at this gap, but one thing I have also came to realize is that it's all like it's like they say when you're painting a wall. If you're painting a wall like this, when you're painting it, you go up and then you come down, but you see how you missed some spots up there. What do you end up doing? You go back and you fill it in, and then you come back and you do this area, and then you're like, oh man, I missed that bottom area, so what I need to do, I need to fill it in. So it's just like what I'm pointing out is like it's like paint. So if you fill in this area and you have all of this area still open, you got to go fill it in at some point. And that's kind of like the idea, the way I think about fair value gaps, is that you can see right here we tapped into it, filled that up. This is a fair value gap, we filled it up, but then there's still unfinished fair value gaps over here. So if this ends up being the box, this is what seems like this is all getting painted, and the only thing that's not painted is just this area right here. So that's kind of where I'm thinking it's gonna at least need to tap into, and then that kind of goes to the whole idea of what I was saying about it needing to at least pull back, I think, to at least, decision area, which would be this. And like I say, it's the same thing that happened yesterday, so it goes back to, I mean, I didn't see it right in the same time, but I'm just kind of trying to figure out if it's gonna do it exactly the same, where it's gonna hit here and then go up. Let's see, if you were to take a trade here and your stops could be this low, that means the low could be 18 pips, which is not too bad. And then the high is 45 pips, so that's like 1 to 2 RR maybe. Pretty much almost a little more than 1 to 2. Oh yeah, I'm not taking it though. I just wanted to see the measurement about it. Alright, yeah. Alright, let's see. Alright, let's see. See what time it is also. It's 3 o'clock. 2:40. 250. Oh, this is, damn, I wonder if that 250. then, like I say, this is another thing too, understanding, let's say an hourly candle. One hourly candle is 4 15-minute candles, right? So if this is a 1 hour candle, and then these are all 15-minute candles, 15, and this is 1 hour. This would be quarter one, this would be quarter two, this would be quarter three, and this would be quarter four. So if you understand that on a time frame of like, okay, when should a move happen? We know moves like this usually happen, like a SMT happens 3 and 4 or 1 and 2. So the real move usually happens in the second quarter, which would be, let's say, the 0 to 15, 15 to 30. So between the 15 and 30 time, and then the third quarter is 30 to 45. Look at what time this candle right here is. These two candles right here are 40 and 45. So that means those two candles are both of these candles right here, which is the third and fourth candle. So the SMT is right here between those two candles right now, which is, you can see those two right there, and that's the SMT between those two quarters like that. And that's, it goes back to, now it's targeting, I believe, like I said, targeting this low down here. See, so it goes back to what I was saying about that earlier though, about, is this gonna bounce off of here like they did the other one? Because is it still bullish because of this? Possibly. But then this could start already coming back down, and this is on the 5 minutes, so this should be on the 1 hour right here. That's why I always move, that's why I switch time. So like I said, if this is the 5 minute, this 1 hour, oh yeah, look at, so you can see what's happening right here. Let me remove this. So look at, here's the 1 hour, and then here's the bottom of it, here's the 50%. So you could see this is where the Model 1 showed up. This is the Model 1, perfect. This is your first fair value gap. But one thing that I don't like, this was at 3 o'clock. So this is at 3. Oh yeah, that's why. 3. So one thing about that though is that at 3 o'clock it was supposed to happen. So it happened too soon. See, it happened too soon. Happened here. So that's the 5 minute. Yeah, so that's what I don't like about that. So like I was saying about this being in the third candle, you see this would be the third candle. That's where this right here would be. So this tap right here should have been on this side of the candle, and if it would have been, then that would have been the real move to come down. So that's just kind of why it's telling me, if it does come down, I think it's going to get respected here, if it doesn't already respect this level right now, because like it did tap that fair value gap. Almost did, actually. It almost did. So this is what also I see when things like this happen, where let's say like you could, how I was expecting this low to get tapped, right? I'm expecting it to get tapped. I said though it was going to get tapped, and the fact that it didn't get tapped, it got so close there's two options. Either I was wrong about the price, or it still needs to go down there and tap it. And then this is what it usually does from my experience, is that what happens is it gets really, really close to your level and makes you think you missed it. So you FOMO in just for it to actually go back down and hit your stop. So, I mean, but it is pushing far. Like, that might have been it, though. Who knows? But that's kind of what I was saying, though, is that what it's going to do is it's going to make you think you missed it. So let's say you get into your trade right here. Oh, I don't want to miss it. I'm going to take it at the break of this high. Let's take it to this high up here. My stop's down here. That's what they love. They love for people doing that because it's going to be easy to come hit your stops because it was going to go down there anyways. And then, so it's like, that's why I kind of say is like I already kind of have an idea of what like let's say a rookie trader would do, you know, how they think, and they all do the same stuff. So it's almost kind of repetitive how you can tell. So I kind of think like a retailer. So if they were to fall for it, where would they put their stop? Right here, right? So if they put their stop here, what is the market makers going to do? They're going to target those people's stops. Or it might not. Let's say it's still pushing up. But that was the whole purpose of why I thought it needed to go down. So it goes back to what I'm saying, though, is that when you have a plan, you follow it. If the plan was you needed to wait for this to get tapped, then if it hasn't been tapped, you can't do nothing about it. And this is how you're able to wait, because it goes back to, you know, this is dang, that thing pushed up quick though. 27 pips. Damn, that was the move, I guess. It got really close. Oh, damn, this thing is pushing. Damn. See, I wanted it to come a little bit closer. I didn't. Damn, that was. But we'll see right now. We'll see. And then look at what it did right here. It just swept that, and it inside of a gap right here now. So it goes back to the same thing. It's always inside of a gap, sweeping a previous candle. Like, one thing I learned from the mentor I learned from, he always says highs, lows, and gaps. That's the thing. That's the only things he's looking for is highs, lows, and gaps. So same thing like this. There's a high, there's a low, and then there's also a gap right here. Where would you want your trade? This one, because you got a low and you got a gap. Whereas up here, you only got in this case, you only got a high. You don't got a gap also. I mean, obviously there's probably a gap somewhere up here or something, but just for the example, you want to go into a gap. was the sweep. That was the sweep too. That's all of this. It's all good. It's all good. I think if this would have hit this middle area, like this box that we were kind of looking for, I would have probably taken that buy from here, targeting this at least. Yeah, I'm just looking over some stuff right now. Just looking over some stuff. So just if you have any questions, feel free to ask. Leave a comment. Make sure you hit that like and subscribe. We're gonna be streaming every single day. So lock in, lock in. And I think that might have been it. Then my level might have been off a little bit, but only thing I could think of is maybe this, just on a higher time frame. And then you could see what it, look at, like I say, a CRT inside of a gap. That's what you want. No top wick. Oh yeah, somebody hit me up. Oh yeah, I just seen the message on Instagram too, so I'm gonna send you that that alignment, time alignment stuff. Alright. Let's see, let's see. Alright, actually let me see this. So this is the 1 hour. Oh, it is that. You know what? Alright, look at this, guys. I want to see this. Look. Okay, we had that. We had that. Let me see this. Let me see this. We had a close above there. What needs to happen next is we need another close above. What I want to see is a close above here. And then one more time, I believe it's either going to sweep that and then come down and then start making its way down here. Because the reasoning why is this also is that how I was talking about this being a CRT on the hourly. I believe so. Like let's see if that happens next. So let's see. Okay, from here it'll be there. Let's see. Yeah, this candle's gonna need a close. And that will be your key level, I believe. Because that will be the close below. And that will be the last candle. Alright, let's see. Ooh, this thing is moving. Damn. Alright, let's see. Alright, so like I was saying though, is that you do kind of want to see a close like this, and then the next candle should sweep it if it's gonna come back down and target these lows. Let's see. Alright, so, and if it starts closing back below here, then that's kind of going to give me the idea of that it might need to start targeting these lows down here. Alright, let's see. Alrighty. Yeah, I'm just watching right now because, like I said, I did take a trade earlier from down here, and that was the idea. So the way I always like to think about it is that if I ever get out early, what would I have done? Like if I was still in that situation, I would be break even right now at least, maybe even trailing it if not here or here. So with having that mindset, oh, there it goes. Okay, so with having that mindset, it's not really like flipped until this entry gets hit, kind of a thing. So if I was still in this trade, I would just be holding it anyways for it to continue up, kind of. And that thing dumped perfectly. What did I just say though? I said I wanted to close above here, close here, and then the next candle should close. That's great. That's what we want to see right there. Okay, so look, so like this is what I was saying earlier about anticipation. If you can anticipate these things like this, then you should be able to understand when you're in rhythm and when you're not. So this is kind of letting me know I'm in rhythm right now. And that thing dump. Woo. All right, so it goes back to like I was saying earlier about understanding how these CRTs work and stuff like that. There's 5 of you guys watching. I appreciate you guys for watching. I'm giving you guys some sauce right now. How I knew this was going to happen like that is because of the fact that how I was saying about this being the CRT. I could tell already just by the signs that this CRT is going to be the one, because I've had plenty of examples that show me, like, you see this being the fair value gap. Oh, perfect. It already hit the second TP. So it'll be the next one will be this area. It goes back to it will be this area right here, like we were talking about earlier. That is, it goes. Can this another thing? Perfect example. Let's say it does go down here, then it proves what I was saying earlier about this getting really, really close to make you think you missed it, just for it to do whatever it needs to do still. But but like I was saying about how I knew this was gonna be the one that does this is because you could just tell. Because I have a lot of examples of ones that work and which ones don't work. And if you, this is one of the ones I call Charlie Brown. So this is the one I call Charlie Brown. You guys, I've never really explained it, but this is what I'm saying about it. This is the Charlie Brown one, which is Charlie Brown one is when the fair value gap, you would expect this fair value gap to get tapped, and then that's what the trade we usually take. But when you understand it's the Charlie Brown, this fair value gap ends up getting broken at one point. But the understanding of that is important because you know right after it closes back inside of the range. And I just flipped it just so I could verify, just show you. But that's what I'm saying is understanding. Like I said, that's why I knew, okay, once this candle closes right here, it's going to be a fake out to come back down, because that's how the Charlie Brown happens, is that it breaks through your fair value gap, which is where you would expect it to continue down. And when it does break above that, it's just a fake out right above it to come back down like that. And then it goes back to that's the Charlie Brown. But that goes back to it's still the CRT. Everything is the CRT, but there's just different variations of it. There's the differences, like I say, there's a CRT that we looking at right here. There's a CRT with the 3-piece. There's a CRT with a different, just like a fake out. There's a bunch of different variations of it. So yeah, I got a few of them that I've kind of got down pretty good. Yeah. Appreciate you guys for watching. I appreciate you guys for watching. appreciate you guys for watching though. Appreciate it. If you guys don't mind hitting that like and subscribe button, hit that like and subscribe. See how many people we got. We got 6 people watching. Yay. Let's go. That's what I'm talking about. Hey man, I'm back on the streaming every day, so make sure you guys are locking in. As you guys can tell, there's a lot of stuff here. There's a lot of there's a lot going on. There's a lot of different things you're gonna have to learn. You have to catch up with things like that. So that's why I say, yeah, Chris, what up? But yeah, that's what I'm saying is like we're gonna have to lock in for the next, few months. That way you guys could really understand what I'm doing, and watching me do it live too. That way you guys could. The thing is I'm not trying to like really give out too like, I'm not trying to be known for giving out signals. But if I see a trade, I'm gonna obviously let you know. But my main thing is just like I say, being able to predict exactly what's gonna happen next. That's my main thing. And just the more I do it, the better I'll get at it. But that's the reason why, though. It's like I said, I still take trades when I want. Like, I'm gonna take a trade whether I give a signal or whether I don't. But it's just the idea is that I just need the screen time. It's more for me to get on screen, because I'll try to take a trade and I won't be on screen. In a sense, I'll just be on my phone chilling and stuff. So it's like I'm trying to get away from, like, I gotta take it more serious, so my idea of taking it more serious is you gotta be on the computer, you gotta be sitting down like a business type stuff, so that's why I'm just trying to hold myself a little bit more accountable. But that's what's gonna get me on screen is by streaming. It's like, obviously when I wasn't streaming, I wasn't like, I wasn't on I mean, I'm still on the computer a lot, but it's just like I said, it's a difference when I'm on stream. I'm locked in for 3-4 hours straight, just cooking, talking, things like that, compared to if I'm at home. I'm just doing it at my own pace, kind of. Here we go. All right, so we want to see that low kind of get tapped. Oh yes, sir. And it goes back to this. This is something else I've been working on. This is something I gotta show you guys. This is called it's an advanced order block entry. So what happens is this tap right here leads to the tap down here. So this is most likely gonna come down here to this low right here, because of the way this order block gets formed. When this engulfs it like that, that lets you know. And then that tap right here, perfect, it leads you to this. So that's another thing I gotta show you guys what's up about. Can't forget about that. Like this right here, like you guys see that little box right there? That right there is the tap. Ooh, it almost tapped it, but yeah, that's pretty much it. It might even be, I think, to the bottom of the body. But anyways, same thing. But yeah, that's kind of what we're looking at right there. Hey y'all, and one thing too is like being able to predict when these trades are gonna happen. When I know I'm in the right trade, I could just like feel it, right? So my point I'm trying to make is at some point we'll be able to just I'll know when this is a good trade, so I'll be able to pass a bunch of fundeds at once type of stuff. That's like I don't want to try to abuse it. I'm not trying to do it like right now, but I'm just saying at some point I'll definitely get to that where I'm just so confident that I'll know, all right, I'm gonna just get 5 accounts passed on this one trade. But yeah. Look at kind of where it gets stopped at, another imbalance. That's why I always say too, it's about lows and highs and um, gaps. It's always targeting something like that. But yeah, if you guys have any questions, feel free to let me know in the comments. I appreciate you guys for watching though. Make sure you guys hit that like and subscribe. Hit that like and subscribe. I don't even know how many subs I got right now. Let me see. Alright, alright. We got no, we losing subs. Damn, that's crazy. There it goes. There he is. Alright, y'all. I'm probably gonna get off after this. I just want to see it hit these levels, and you know what time it is already. Yeah, our hey Nick, Coach Carter. Hey Nick, yeah, Coach Carter. I've been kind of off streaming for a while actually. So that's probably why. But I'm gonna start streaming again every single day again. So make sure you tap it in every single day. All right, look it. Now it goes back to this. Okay, let's see if it got really really close. It needs to hit this box. If it hits that box and gets rejected, then it kind of is giving me the idea. Yes, it needs to come back down here. But yeah, I'm gonna start streaming every single night again. So um, yeah, just you'll start seeing me pop up again. I got a lot going on now, so you have to spend some time trying to catch back up. Ooh, there it goes. But yeah, I'm gonna hop off after this. I just want to see what happens here, and then I'm gonna hop off after this. What I want to see is it get kind of rejected in these areas, come back, start targeting this and this. But if it breaks this high or this high right here, then I believe it's invalid. Everything, then it's gonna just continue probably going up still. And that's kind of fine too, but. And this just filled that up right now. Okay, there it goes. Turn to push. Like they say, the wicks could do the damage, the bodies tell the story. So if the body stays below these levels, that's a good sign. If the body starts closing above here, then it's kind of signaling the next level will be up here. And then this invalidates everything about coming down. So it shouldn't create new higher highs. I believe it should start see something. See from here. You know what? It's looking like it's gonna come down to this area, I think. If not that area, it's a little low. 19, 21. All right, yeah. So look at. So now we want to see it start coming back down towards these levels down here. That's what we want to see right here. So there's two options. Like I say, this is a decision point, but from what I'm kind of getting from this, well, I don't know. This is a little weird one, but I guess it does. It is valid. But the reason why I'm kind of saying is that it needs to come down. No, yeah, I think it's gonna hit this level. It's doing everything. Like I said, it's doing everything I've been saying. So as long as it keeps doing that, then like I said, then I think the first idea was coming into these areas, this 50% area, which will be because this is because like I gotta also teach you guys how I use my fib too. You guys gotta understand how I use the fib. So that's another thing you guys gotta be aware of. There's a lot to it, but Remember, it's not about different strategies. It's not all different this, different that. It's just more information. Like how much you want to know. Let's see. Right here. All right. So let's see. Oh, and look at what time it's about. Bid me some. Santos, what up, my boy? What up, what up, what up, Santos? Alright, it's 12:45 right now, or 3:45. That's inside of that new macro. So 3:45 to 4:15. So this macro right here is a macro, and you got to understand what a macro is. It's the last 15 minutes of an hour, the first 15 minutes of an hour. But the reason why is that it's usually it moves around those times. Look at what it's doing now. Mm-mm-mm. But yeah, I appreciate you guys for watching though. Appreciate it. Make sure you guys start tuning in. We're gonna be locked in every day again. So make sure you guys are watching. Ooh, this thing is pushing. Let's see. Mm. Oh yeah, this thing is pumping. All right. So now this might have swept that. What session do you prefer streaming? Asian, London, or New York? So with my schedule, I'm most likely going to be streaming uh, London, most likely. Like I'll be streaming probably the end of Asia and the start of London, like the opening of London and stuff like that. But I actually like London the most because from the data I've collected and learned from people, London usually makes the low or high. So you could go back test it too and like go to the top. Obviously, it's not every London, it's not every New York, it's not every this, and it's not every single time, but things that repeat the most, like when you see the real biggest bottoms and the biggest of tops, they're usually in London. And then understanding what day it is, like Monday, Tuesday, Wednesday, Thursday, Friday, they're all different, as in quarter wise. So there's a 1 quarter, 2 quarter, 3 quarter, 4 quarter, obviously. So they're different. So you can't treat Sunday, Monday the same as you would like a Wednesday or Thursday. But then you also can't treat a Tuesday like a Monday or a Wednesday or Thursday, because Tuesday has a low or high for the week most of the time. So it just kind of depends. It's important to understand like the time frame, the quarter, and things like that of where you're at and where you're trading and stuff. So if you understand, you're in the like think about it the week wise, also in the month. The first week of the month is not the same as the second week, which would be the second quarter of the month, which fractally is technically like London. So yeah, there's a lot of stuff. There's a reasons why I choose London, but I do like London, and I do trade New York, but I'll probably be streaming most of the time for London. Yeah, here we go. Let's go. Let's start pushing now. That's what we want to see. Want to see. And then where I see a target is right here, somewhere at least into that box, like I was talking about. So it goes back to this: is that this is gonna be, I believe, a major decision point. It's either here to do this, or it's gonna do here to do that. All right, we there. So this will be the next area right there. And then which pairs and indices are you gonna hope to trade during London? What I usually trade the most is I trade gold the most, but I've also been trading Nasdaq too. So the NAS100, I've been trading that too. So for the most part, though, I've been, like I said, my day to day stuff is gold most of the time. So majority of the time I'll be trading gold. But I also look at, like I said, I'll look at silver, I'll look at the DXY. There's always like a clue somewhere, if you just kind of use a bunch of different ways, confluences, and different things that I've learned and stuff. But yeah, I don't, and I trade Bitcoin, I trade H bar, I trade Ethereum, I trade Tesla, I trade Lucid. Which other ones? So yeah, I trade a few different pairs, but it's all the same analysis. Like the idea of how I read it on this chart is how I would read any other chart. So like I don't have a different strategy for either. So it's kind of all the same. So it's a good thing though. Like I said, is that you could trade. It doesn't like. I just got to spend time on whatever pair, and I'll find a turtle soup on it. I'll find a fair value gap. I'll find something for it. But yeah, so let's see. All right. Yeah, I wanted to start pushing down here. So like I was saying is I wanted to start pushing lower here. And then this is the area like um from my model that I understand, like just going off of like what happened the other day. Obviously these are different situations. It could it could always do something different. But the way that other one happened is that once it did hit this gap right here, well, actually let me check this out. Let me check something out. We'll do it here. Okay. So move there. The close above was, oh yeah, right here. 15. Okay, right here. Okay, perfect. Yeah, it was right here. Right, so look, we broke above, and then we came down, and then went up. Let me actually do that. All right, let's see. So what I have here is a break above, same way. It was a tiny break above though, but I mean, needless to say, it did break above. Whereas in this one, it broke above clearly. So that's the one thing. So what I usually do is your entry pattern still on your Discord, and do you have a playbook video perhaps? Not full playbook yet, but every day I stream, I'm gonna pretty much be giving you guys how I get into it, how I find it all, and stuff like that. You're definitely not gonna be able to just learn it in one time, one try kind of thing. So just every day, lock in every day, and if you have any questions, just ask them, and I'll keep catching you up. And the idea is just to understand it the way I do, and then I'm working on having a blueprint, which is like I have it all written down pretty much step by step of what I do. But that's taken me some time. I've been working on it for a little while, but it's taken me some time. That'll make it a whole lot easier, so you'll know what to look for. Obviously right now only I can say it because it's in my head, but once I could put it on paper, I could, anybody could read it, and then you just have to understand what I'm talking about. All right, so what I usually do when I'm trying to figure out these things of like, oh, why did this one work and why didn't it not, whatever, blah blah blah, right? So the idea is this. Perfect. I want to close above. Okay, I gotta close above. That's what this was. I technically did get a close above, but it was real small. Okay, so let's see. Okay, that could be an issue. So what happens next is when I go down to the 5 minute now, is right here. Perfect. Then I come all the way back down and I tap this gap, like the same gap that I was talking about right here. Perfect. So let's see about that. Now this one, same thing. So when we closed above it, oh wait, no, this was the first close above. Wait, let me see. Yeah. So yeah, it makes a high, comes back, comes down. Yeah, and it comes back down. So that's exactly what I believe it's doing right now. Is like this over here. So this is the line we closed above. Perfect. We closed above. And then you just come all the way back down. Pretty much down all the way down to that gap. So let's say here we closed above, and now we're just going to come all the way back down to this gap. And then if this is the gap, I'm wondering if this is where it's going to get rejected to come back up to break that high. Understandably, yeah. But it's easy though, Coach Carter. It's not, well, it's obviously not easy, but the idea though is that when you have a model and you can follow something that's repeatable, if it doesn't show, then you know it's not the trade. It only shows if it's the trade. And just like simple ideas of like how I talk about, like this is a different model. This is one of, like, I have like 4 probably models type of thing, but the idea is that this is a different variation of what I'm gonna eventually, what I'm teaching you guys now, but this is like a different variation. This is a little bit more advanced. It's just like you got to understand the first part so you could understand this. But that's where I'm saying is like, this is kind of what I wanted to get to where I'm able to tell you, okay, this is, I call this one the Charlie Brown. The reason why I call it the Charlie Brown is because it's a fake. It's supposed to get rejected off of this fair value gap, but it actually fakes it out to come back down, and that's how I knew it was gonna come down from up here. Because that's what the Charlie Brown does. So that's where I'm saying too, where it's just like there's just steps. If you can identify, okay, this is what needs to happen. If this happens, then it's this. If this happens, then it's this. So it kind of just, it's already giving me that idea. Um, and then let me see silver. I've been liking going back and forth with silver because it will give you definitely some good information. Ooh, that big old dump. 1830. Alright, let me see. Alright, let's see what happens. Damn, this thing is just not moving really. But I think too it's the time, because it goes back to it's 1 o'clock right now, so it's 4 o'clock New York. So let's see. But yeah, I'm probably gonna be hopping off though. Actually, it's already getting kind of late. I've been streaming for quite a while already. My voice is kind of getting tired. So, but yeah, I appreciate you guys for watching. Lock in tomorrow, same time, and make sure you guys hit up my Instagram if you guys have any questions. The Instagram is in the description. I appreciate it, and I'll see you guys. Oop, there it goes, dumping down. All right, I'll see you guys. I'll see you guys tomorrow. RP. Oh, speaking about fair value gaps, I noticed price likes to react from a 15-minute, 30-minute fair value gap, usually above 4-hour support and below. That could be true, but it just understand like the whole purpose of like a fair value gap is kind of like understand. I don't know if you were here earlier when I gave that example about painting. Like fair value gaps are just like if you're painting a wall, it's like the part that you missed in the sense of like you're gonna eventually go back over it to fill in that space. So a fair value gap is just that same stuff. It's just it's almost like the opening, like the part of the wall that you missed to paint. And a lot of times you go back to it, fill it in, and then you get rejected from it. But you just also have to understand where you are. Whereas in like this right here is a fair value gap, it got rejected, but it only got rejected because it's in a bearish like bias. Whereas in you do it over here, look at what happened. It blew straight through it. It did get rejected the first time, but that's what I was saying is this is what gave me the idea that it was a Charlie Brown. So it was a different type of trade, but yeah. And it's not so much, I guess, it's not so much the time frames that is like it's not like a 30 minute or a 15 minute is magical, which is why they respect it. It is a higher time frame, but the way you need to understand like a fair value gap is like this about like you see this is a higher time frame fair value gap, which is this box right here. So this is a higher time frame fair value gap, but this is a 4-hour fair value gap. So that's why on the 15-minute you end up getting this model 1 pretty much at the 50%, which is this yellowed line. And look at where the sweep of it kind of happens. So it's kind of like it's like the way to use the gap is also important. So it's like that's why I say it's important to understand. You need like all we really look for, like the guy I learned from, one of my mentors, he says if he only could choose a few things of what to look for, it's a high, low, and gap, which means it's either the high or low, which is technically the same thing. It's just whichever side you're looking at. It's high or lower gap. And gap, actually, not or, and gap. So you're looking for a higher and low and a gap. So it goes back to kind of what I'm saying about this being on a daily or a 4-hour gap. This big red box is a 4-hour gap. That's where the move is going to happen at. It's always, the trade is always in a gap. Everything we do is always in a gap. So that's why I say is like it's always in a gap. Remember that. Like every trade we like when you learn the model I take, every trade you take is going to be in a gap. That's how it's got to be. Cuz that's how you repeat it. Like that's why I also say it's a thing about having something that you can repeat. You can't repeat something that's not done over and over the same way. So if one of the trades that you have is in a gap and that's the model, then every other trade needs to also be in a gap. Like damn, my voice is getting fucking dry. But yeah, like I said, if your model has a trade that's in a gap, then every trade needs to be in a gap. And if it's not in a gap, then it's not the trade. And that's how you avoid taking bad trades. Alright, yo. But yeah, I'm gonna hop off. I appreciate you guys for watching. Lock back in tomorrow, same time.